Welcome to this video on EURUSD. EURUSD is currently trading around 1.1585 levels, while expectations of a Federal Reserve rate cut in December have put pressure on the US dollar. The euro still lacks any solid fundamental driver to take advantage of this shift. Let's now discuss the fundamental outlook. The markets have sharply increased bets on a December 10th Fed rate cut. According to the CME Fed Watch tool, there is now an 85.1% chance of a 25 basis point cut in December, up from just 39% a week prior. US consumer confidence dropped sharply in November to 88.7 from a previous 95.5 level, the lowest since April. Even more concerning, the expectations index fell to 63.2, well below the 80 key level that often signals recession risks ahead. The weekly jobless claims unexpectedly fell to a 7-month low of 216,000. However, the Fed's Beige Book noted weakening labor demand in half of its districts, suggesting employees are becoming more cautious despite low layoffs. Now, coming to the euro part, the German business sentiment deteriorates. Germany's business climate index slipped to 88.1 level in November, missing expectations again. Weak industrial activity continues to weigh on the region. In the latest financial stability review, the ECB warned that the global risks are unprecedentedly high, highlighting potential sovereign debt issues, particularly in France, and rising credit risks. Eurozone M3 money supply also just grew by 2.8% in October, unchanged from the previous month. Even with easing policies, credit conditions remain tight and are not translating into the stronger economic momentum. Now coming to the technical view, EURUSD has rallied sharply on increasing market conviction of a near-term Fed rate cut, but the broader structure remains vulnerable. The pair is now testing a critical resistance level where sellers have historically re-emerged. The 50-day EMA and a descending trend line overhead continue to cap gains, while the 1.17 level stands out as a major breakout trigger for bulls. A daily close above 1.17 and more convincingly above 1.18 would confirm a shift towards a bullish structure. On the downside, the 1.14 level remains the key floor. It is reinforced by the proximity to the 200-day EMA, making it a decisive battleground for the directional bias. A clean break below the 1.14 level would indicate a renewed bearish continuation towards the 1.11 and possibly lower levels. So, what are the recommendations for importers and exporters? For Indian exporters, you may consider gradually selling some euros at the current levels if you prefer not to wait for further moves. For Indian importers, those with flexibility might choose to hold off on major euro purchases for now. This allows room to respond if the market becomes more favorable later in your direction. That's all for this video on EURUSD. Thank you for watching.